This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And we are seeing that risk-off mentality take hold of the agricultural sector yet again today. Grain's feeling the brunt of that. We've got corn failing to really hold those gains that we saw over the past two sessions. We went and filled that gap left from Sunday night, 385 to 388. The inability to get price action out above this pocket is a big caution flag, and it has buyers sitting on their hands and sellers stepping in. Now we're testing towards the bottom end of that range. 375 to 377.5 is a must-hold area for the bull camp. A break and close below here, I think, opens the door for a potential retest of those contract lows at 365 3/4. So again, going into the Friday's trade as well as next week's trade, 385, 388 is a must get out above resistance pocket for the bulls. A failure to do so marks lower highs, potentially taking us to lower lows and retest those contract lows. Now, moving over to the soybean market, we've had a big technical breakdown over the past couple of weeks, which really started on a break below that 940 level. It has accelerated below that $9 handle, but I think we're starting to come into a support pocket here. 875 3/4 at 880 is a pocket that we like buying on the first test. We want to see sort of a springboard reaction, though. Don't want to see prices linger. This pocket represents a gap from back in May, as well as the low end of the range from August, September, and December. On top of that, you've got the RSI in oversold territory with a reading of 21. So again, we like buying soybeans down at these levels, but want to see that springboard reaction. If we see prices linger, that's going to be a caution flag, and we'll take our position off and move to the sidelines for the time being. Now, wrapping things up with the wheat market, we still think there's a potential of a longer-term top in the Chicago wheat contract. 560 for that March contract, going to be kind of a pivot pocket. The bulls can achieve consecutive closes out back above here. Potentially, we start to consolidate a little bit higher. A failure to do so, I think, could take us down towards 542 to 546. This represents trendline support from those contract lows in September, as well as the 50-day moving average and support from the beginning of January. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.